So we just heard a really interesting take on collaboration and partnerships, and we like to take this conversation forward. And to that effect, I have an esteemed panel here with me. Actually, some of the successful partnerships that you have come across of companies, we today have their representatives here, and we will highlight some key drivers that have motivated these partnerships from the start, and then also describe a little bit how they have evolved over time. To that effect, I'd like to introduce my panel. On my right, we have Amanda Howkins. She's Global Head Sales and Partnerships and Customer Success at Form 3. Next to her is Jenni Himberg-Wild, who is Head of Financial Institutions and Fintech at Barclays Bank. And last but not least, we have Ben Ellis, who is Senior Vice President and Global Head of B2B Connect at Visa. It's quite an international panel because, Ben, you are based in San Francisco.
That's correct,
Jenni,
yes.
You are in Frankfurt. Amanda, you are in London, right?
Indeed.
And my name is Daniel Szmukler, Director of the Eurobanking Association. I'm based in Paris, so quite an international setup here we have for discussing partnerships across the board. So in preparation of this panel, we actually asked ourselves what makes partnerships successful, and in order to answer that question, we had to also discuss a definition of partnerships. And I think that's something that has changed over the past years. A little bit like the milestone I like to set is probably the period before COVID and the one post-COVID. And the reason for it is that in my own experience, I've seen banks and fintechs collaborate in a fashion that was much more among equals, where the bank really put forward its possibility to capitalize certain partnerships, invest in fintechs, where it offered its incubator for fintechs to come in and trial and also grow in scale. But it was not a very balanced relationship. And typically what I've seen as well was that fintechs were very happy to engage with multiple banks across the board, because there was always the risk that these partnerships would fail at a quite early stage. And maybe pre-COVID as well, partnerships were more defined like commercial agreements, and to some extent just like vendor relationships, but with a prioritization attached to it. I think this has changed. And we have seen post-COVID that a lot of fintechs actually didn't make it. So there was a high rate of going concerns and bankruptcies, and that those surviving fintechs that came out of the crisis quite stable often already had a partner that helped the fintech to go through the difficult times. And that partner was often a bank. And the bank provided liquidity, provided capitalization, a certain safety net as well. And it turned out that in research we did, we actually noticed that 2 out of 3 partnerships were at the risk of not meeting the expectations that were set forth at the time when this partnership started. And so that made me think, is it also about not just finding the right combination of partners, and on what do you want to partner? Is it on distribution? Is it on the product side? Is it on operations? But also to set the expectations straight and to have maybe something like a shared vision around where this journey is going to lead. And so this is what we would like to discuss today. And maybe some of you are aware that Form 3 has partnerships of that kind, both with Barclays and with Visa. And as you know, this can help us also look at some of the more nitty-gritty vectors in what makes a partnership interesting and successful, including visibility of this partnership, including risk-sharing considerations, including, as much as we can talk about, also revenue-sharing opportunities that arise out of this partnership. So we'd really like to scope this out in a number of dimensions, and we hope that, of course, if you are aware of also partnerships that you have engaged in here in the audience, please raise your comments, or if you have any questions, also through Slido, and we will be able to follow up on that. So, without further ado, what is your definition of a partnership nowadays, and how have you seen this evolved, and how do you decide with whom to partner? Amanda, starting with you.
Okay. I mean, you raised some really great points there, Dan. So I think my definition of a partnership is where two or more organizations are bringing something together that they can't do on their own. So there has to be a defined value, a defined go-to-market, a defined product that you start with. And the critical success factors in that are the what are we doing, why are we doing it, who, where, those, the normal stuff that you would expect. And I think that's what to me is a true partnership. As you say, otherwise it is pretty much just a vendor relationship. So you have to be really concise and really clear on what it is that you are trying to achieve together.
And is that always easy in terms of, I mean, you have now two partners here at the panel. Is that easy to find out on what domains you want to partner? Is there a lateral, so to say, template for success that you can use in this regard?
Yeah, I mean, no. Let's be clear. No relationship is easy. You have to work at it. So, but you have to understand between you what your market appetite is, make sure that your risk, your governance, your ways of working are all aligned from the beginning so that you know that you've got a successful partnership on the table. And you have to have a product fit there as well.
Yeah, I mean, I would absolutely agree with that. And I think one of the things that oftentimes gets overlooked in partnerships is the organizations have to be philosophically aligned, right? If you have differences in terms of culture, in terms of how the partners think about what they want to do, what their vision is not going to work. So in terms of execution, in terms of reliability, in terms of security, in terms of how to engage, a philosophical alignment between the partners will go a long ways towards driving a better relationship.
That's true, and we can probably come into the bit about how these evolve over time as well. But I think one of the things we've discussed quite a lot, and we are super sort of transparent on these things, is that whilst we can be aligned philosophically, I absolutely agree with that, there is also a point in there to kind of acknowledge that actually, if we hear talking about specifically fintech and bank partnerships, we have a lot of bank-to-bank partners, like we would like to call them in the audience. But fintechs and banks are not the same thing. They don't have the same culture. There are lots of differences, and I think the key to the successfulness of the relationships and the partnerships will in the end come into, are you able to also recognize those differences and deal with them? And figure out how the working relationship works best to the kind of similar direction. I was going to comment on the point of what is a partnership and how do you define it. I think also maybe what is not a partnership, right? And we can talk a little bit later on about where they work and what they don't and what's kind of common in those ones. But what is not a partnership is basically dealing with that need, like you raised, Andy. But choosing a different method. So we've seen a lot, and I should probably caveat my reason of being Frankfurt. I do cover the segment, as stated, of Barclays Europe only, and from that home market for my back garden. It's not a partnership if you're a bank and you acquire someone, right? These are fantastic deals. You've got a need, you go and do acquisition of some type. We've seen UniCredit, you might have seen this slightly, maybe it got lost a little bit with some other news in a European press, but you know, them going in after some fintechs or BNP, for example, Cantox acquisition, you know, that kind of thing. That is not a partnership, we know that, right? You're acquiring something, you bring in the same expertise in-house, but it's not a partnership. Similarly, as you have a vendor relationships, they're not a partnerships. You know, someone coming in and just using your rails is not a partnership. Well, when I go out and sell my solutions, which we can talk more about, or Visa goes and sell their solutions to, say, the fintech market, that is also not a partnership. That's a client kind of a relationship. So they're all very different. They may all kind of resolve the same need, but they have distinctly very, very different things to do.
Yeah, I
So
agree.
we can conclude then as well that on this particular point that partnerships are not just a euphemism for commercial agreements. There is more to it. There could be also vectors around sharing resourcing and driving together a joint vision of where this partnership, be it on the product side, distribution side, operation side, etc., will lead. So it's clearly a deeper relationship than the conventional supplier relationship we typically have looked at in many regards. And Jenni, you mentioned as well the difference in culture. I think culture being a tremendous driver, whether a partnership is successful or not. There is the saying, right, that culture eats strategy for breakfast, right? There is a big difference between a culture of a bank and the culture of a fintech. That difference in the past was often seen as an inhibitor to successful partnerships alike. Is that still the case, or do you think something has evolved on both sides, maybe?
So I think there's many things that have evolved. It's going to sound a little maybe soft, but at the end of the day, it comes down to people. If you have people in any partnership, wherever you do it, but if you have people on both sides who have got actually a bit more of an understanding, maybe a deeper understanding of the other side, even if they're not the same as the other side, then it's a lot easier to find the common ground, find how you actually work together. It's a well-known fact that with Sandy and I have an organization that I sometimes have to go in and shimmy along. I have to kick it up a gear. I have to tell them to go for it, be hungrier, be angrier, be quicker, you know, execute, right? So I'm shimmying my organization along, and I'm pretty sure Andy...
The opposite my side, right? So I'm putting the reins on and saying, hang on, whoa there. You know, we have a partner here with governance processes and deeply, I mean, overall, we are both working towards a common objective, right? That we're in payments, the resilience, the safety of the end consumer has got to be our priority. But yeah, my organization, fintechs, tend to move very quickly. You know, it's neoteric technology. It's people that are out there that can move and take a go-to-market strategy much quicker than typically the larger organizations can. But that commonality between us has to be that we are working together to bring those two organizations to a visible, trusting partnership and understanding of what is required either side to make that work, find that common ground to move forward.
Ben, you're not working for a bank, but you work for a market infrastructure that is owned by banks. So culturally speaking, I mean, Visa is known to be quite, I would say, active in partnerships in that space. You also acquire a lot of fintechs. You have a history in that as well, more so than maybe what a bank would do. So you're more willing to take risk on such partnerships as well. You have deep pockets, right, as well. So you have risk capital. You invest as well in that space. So what criteria, what decision factors do you use when you engage in ventures with other fintechs?
Well, it's an interesting question, and it's one where, as you described, we're not a bank at Visa. We're also not a new fintech. I mean, with respect to the prior speaker, I might say we're one of the original fintechs that's now grown up, right? And you know, still innovates, still drives technology, but also has a large set of financial institution clients that we work with. When we look at partnerships, and we do, we very much continue to engage with the newer fintechs to partner with them to see how we can jointly support our financial institution clients. And when we look to engage, there tends to be two types of partnerships. There's probably more than two, but many of the partnerships fall into one of two categories. There's a category where there's a specific capability that might be complementary, right? And so Visa's very good at building payment networks. We're very good at establishing rules. We're very good at engaging with our financial institution clients. We're not as practiced in going out to end users, right? And so we'll work with partners sometimes who for them, that's what they do from a fintech perspective. And you can get the situation where the partner brings a capability, Visa brings a capability, and you do get that 1 + 1 = 3 benefit. There's a second category where sometimes, and this might be one where you fit in, where sometimes there's a technology that gets built, and there's an investment that goes into building it. And rather than having every bank repeat that and spend the tech resources building it, and this bank spends that resource building it, you can leverage that one-time build across multiple different financial institution clients. And so sometimes if there's a partner that's built that, rather than us redoing it or our financial institution clients redoing it, we'll say, well, you've already built it, let's partner together and let's jointly bring that capability. And so we look for those types of things, either a complementary capability or sort of an asset that's been built and can be leveraged across multiple clients in ways to really drive those partnerships going forward. We find those tend to be relatively more successful.
Coming back to organizational structure, where do partnerships typically sit in your respective organizations? Is there a separate department? Is there also difference between partnerships that are, of course, investments, as opposed to maybe product or distribution-related partnerships? How does this work? Starting maybe with Ben.
Yeah, and for us, it depends on the nature of the partnership. And so if it's more of a product type partnership, it lies more in the product organization, right? Because that's the business function that's responsible for it. If it's more distribution, it would be more in our go-to-market. If we do make an investment, there's obviously the investment committee that has to go in and opine and go through that process as well too. But we try to look at it in a way in terms of what's the benefit to Visa, what's the benefit to our clients, and align organizationally the ownership of the partnership with how to actually deliver that value.
I can probably comment on, like from our side, where does the most successful partnership sit and how do we look at those ones? Because the reality is that partnerships are in our organization across the board, right? All the way from ops to the top of the house, they can sit anywhere. But I would say that, say for example, if we discuss here with Andy on the panel, so she can either admit this or deny it afterwards, but I think in our partnership, it actually goes into every level. So yes, it's a product partnership, so the product colleagues in here, they would be driving the partnership, and some of them in the audience today, they know exactly how they would be partnering together to actually do the build out, right? So it sits over there. However, it doesn't stop there. Of course, it also sits in our operations. Of course, we also have some kind of relationships that sit within the kind of principal investment side. So you really have skin in a game on both sides. But then, crucially, it sits also in a sales and coverage organization, right? Yeah. So taking something like that, it's not powered by one party. It's not white labeled. It's actually joint face to market. So it also kind of sits in that. Can we jointly go and see a customer together? And can we actually put that pitch together like that? And can our organizations come together and do that seamlessly? And that has been a journey. Not always been like that, right? But I think that's where we really start measuring in, like, okay, now we have proper success because we can actually both trust each other, each other's brands and the ways of working in front of the client, the end user, whoever that is.
Yeah. I agree completely. It has to, I think, what Ben was saying is absolutely right. It sits in different areas, particularly in a fintech, though. I think it has to sit right from the top level, that strategic kind of macro level, all the way down into the coverage, the execution, the business layer of the organisation. And that defines a successful partnership, because you need that alignment from the top down. Yes. If you try to instigate a partnership at a business level, it's not going to work if it doesn't have the senior leadership teams leaning into that to make that success. And equally, if those messages aren't filtering down from the top and supported in the organisation, then the execution is not going to, happen the way you want it to happen.
We have absolutely seen that. Where our most successful fintech partnerships, we're working with the founder or the CEO or a member of his or her management team. Absolutely.
Yeah. So some years ago, I saw in the banking industry a lot of innovation posturing, where banks were under pressure almost, to showcase that they have partnerships with fintechs, they collaborate with fintechs in order to augment its own innovation pipeline and to show that they are capable of handling disruptive technologies. You remember when we had the blockchain hype, every bank was suddenly saying, we have now a pilot on blockchain and we do this with this or this fintech. You have it as well in other technological areas around cloud, of course, when we moved more and more into the cloud. And there, of course, it's much more limited because there are only a handful of really large global cloud providers. And then we saw it as well with, and that builds a little bit on it, banking as a service, payments as a service, all of that. Now we start seeing it on AI. So another hype, but certainly where a lot of value is being created through partnerships. So back to maybe the disruptive potential that this carries in your own organizations. How do you keep it on track? How do you make sure that it doesn't really disrupt too much of your bread and butter business? Because it is not often laying in the core of a bank, right? It grows on the periphery and then becomes over time more and more important and potentially could replace parts of the core. But how do you keep it managed on track? Is there a project management structure? Is there an agile structure you have for this? Or is it really a conventional, I would say, leader that runs this, and then there's a lot of compliance involved, legal department, making sure that, so to say, the contracts and the SLAs are respected. So on a day-to-day basis, how do you keep it on track?
Well, I'm going to start by saying something that's potentially a little bit risky, but from a fintech perspective, as much as we are out there being disruptors and really encouraging innovation, we have quite a finite set of resources. So almost mandating innovation from a bank and a large kind of corporation perspective makes our lives quite challenging, because we have lots of interest to do these kind of partnerships. And we have to place very considered, very structured and strategic bets on how we set partnerships up in the ecosystem, because we don't have that finite resource, we don't have those deep pockets, and we need to make sure that we're placing our bets appropriately. So I would almost say from a fintech's perspective that the kind of mandated innovation can make things quite difficult. Where it's worked really well in the past, and again, the Barclays partnership is a really good example. We've got the similar partnerships with Visa, but if I speak about Barclays, it is about that hanging it back to the strategy. So what are we doing, and how are we going to do it to make it successful? Because we don't have that resource and that money behind it.
Well, let's talk a little bit about this particular partnership. My understanding of it, the partnership you have with Barclays, that it's on the product side. It's around software that improves the customer experience, and you expand your existing offerings with that. Can you describe a little bit how this partnership has evolved? When did it start? And in terms of maturity, where do you see the journey?
So long time ago, it actually started with few people from Barclays leaving the corporate bank world and setting up a business. I remember, and partner with other people, seeing a need in the market, right? Being frustrated, perhaps, at that point in time to say that, okay, there was a real need in the market to start building something new. I remember the first time I came across Form 3, and it was actually day one in a financial institutions group. And the Form 3 folk was visiting us. And that's the first time I heard the kind of a term of cloud native. And I remember sitting there and going like, I have absolutely no idea what you're talking about. Like, what is cloud native? But that's kind of how it started, early days. Yes, there is an investment history in there, being in there right from the beginning, and on some of the seed funding. Now, of course, Form 3 has grown massively, has got many other investors. So it is not exclusive from that kind of a perspective, if you wish, but we're always there. On every fundraise, we are there. But others have come in too, in force. So it's not really so much about that anymore. I think this is where we come back to the how has it evolved type of a conversation over the years. It's about product, but again, coming back and not repeating myself, but coming back to the point, it's about product. It's about product which is very specific, caters for a specific marketplace. So I hear this question a lot. People want to know, how have we built this fintech franchise, like us serving fintechs, for example, so other PSPs, we're specifically talking about payment firms that are not banks. And we typically, I get asked, and the team gets asked to speak to other banks about this a lot. And we do, and often the conversation about compliance and governance structures and all of those different things. We actually rarely get the opportunity to come and talk about the other side, which is, of course, well, how do you build the product? And that's where this partnership comes to fore, right? So it is about product, it's about the go-to market. What do you actually offer? So you might have the best governance structure in a place, but if you haven't got the offer, then it's not going to be clearly successful. And that's where agility of bringing in a partner like Form 3, I think, has been really good. Also, they're a little impatient, right? And they want to innovate. I mean, earlier on, I think we got referred to rogue by some of our in-house innovation, which I took a slight offense to that. I don't think innovation is rogue. Like, innovation ought to be good. But that aside, it is obviously bringing in partners who've got that mindset, like Andy said, all the time innovating. We have finite resource too, and given that we are working so much on our core and everything else that we need to do, it is sometimes better to look at the partnership who then brings in that innovation mindset every day, right?
Absolutely. And it still goes back to you are leveraging each other's strengths. So, working with a brand like Barclays, like the Visas of the world, but particularly in the Barclays, they bring the scale, they bring the credibility to the market that we're servicing, the challengers, the neos, the fintechs.
So you brought the cloud native technology?
So we've got that
and
kind
Barclays,
of
the
neoteric technology. So each of us brings something that makes that partnership work together that we cannot bring singularly to the market. And one of our customers, our joint customer coming to us, gets the benefits of both organizations. They get to move fast. They get to have that, that kind of absolutely evergreen, future-proof technology estate with the capital and the brand and the scalability that an organization like Barclays
So in very simplified terms, I get that. Now, the partnership with Visa, what are you bringing to the table there? Is it your network?
Yeah, so it's exactly that. It's the network, right? And so one of the things we work with Form 3 on is how, they've built some of the connectivity, right? So we don't have to rebuild that. We've got other functionality in terms of network, in terms of the cross-border side that we can deliver. And so you have a very much of a partnership that actually delivers value to our joint clients.
Yeah, great. Okay, I'm mindful of time. We have 10 more minutes, and I wanted to maybe take the conversation now into successful partnerships that exist today. We just discussed 2 of them. Let's look at other partnerships in maybe the distribution or operation area. Customer experience is a big word in all of this as well. that's really at the front end. So partnerships that create better customer experiences. In my view of that space has been quite tainted, I would say, by a number of reactions I've seen in banks saying, no, the customer is really our space, and we don't like to involve others to service our customer, not even on a white labeling basis. So that whole customer experience space is a space where fintechs actually saw a sweet spot by really disintermediating banks in the last mile. We have seen it starting all the way back with in the payment space with PayPal, for example, sitting on top of the bank infrastructure, creating an overlay service, and at the same time facing the customer, providing value add that the bank could have provided as well, but decided probably not to do so. And at one point in time, PayPal then partnered up with a large bank to just say, take care of all the settlement of these payments, because we're really not into dealing with all the infrastructure, plumbing and piping. So take care of all of that. And one bank, probably you all know which one it is, took a big contract on that. And having talked to that bank, they told me, in this particular case, we don't need to face the customer because we're not really always focused on the retail side. We're more, focused on large corporates. We're focused on merchants. So PayPal is much more P2P business, right? And it's funny how that has evolved. When you look at it now, that animal that at the time was a little bit neglected by the entire banking industry has become a major player across the board. Is that something that you see happening in other areas with other fintechs that actually grow out of the shoes?
Yeah, no, it's interesting. I think one of the core issues is I have yet to meet a bank in decades of doing this that says, I just have so much tech funding and tech resources, I just don't know what to do with it at all, right? Every bank is constrained on tech resources. So you're either focusing on your customer experience, you're focusing on your core infrastructure, you're focusing on something. And so one of the things that we try to do at Visa is we say, we can handle payments. We can handle cross-border payments, whether it's a push to card, whether it's a push to an account like an ACH, whether it's cross-border wire. We can take that off your plate so that you, the bank, can focus on serving your clients, whether that's improving the customer experience, whether that's investing in capabilities and functionalities. And so I think there's an element to what you described, which is how do you, if you're a bank, really focus on what makes your service better and what allows you to differentiate yourself in the market. And for me, a big part of that is the client engagement, is the customer service. So whether it's how do you connect to an RTP, or whether it's how do you send a cross-border payment, let others who have built that once handle that. You don't have to rebuild it. Instead, focus on what helps you serve your clients.
And a story of fintechs. When we talk about bank fintech collaboration, fintechs are not necessarily startups, and they're not necessarily small fintechs. There are some very large fintechs. Yeah. Take the example of Apple and the Apple Card, right? Also partnering with a bank. Maybe people would say not as successful. What went wrong there, for example? Where would you, without describing in too much detail, but was it culture? Was it risk sharing, revenue sharing? Was it, one inequality of partners? What can go wrong in such an example?
Potentially all the above. And I think, we've talked about it a little bit, other speakers have talked about it a little bit, not all of these innovations succeed. And by the way, that's okay when you're trying to innovate. I think, from the outside looking in at that one, I think one of the challenges was mismatched expectations on the part of the different participants. I think a little bit perhaps of lack of understanding on the part of some of what they were really getting into from an operational perspective, from a regulatory compliance perspective. And I think it became more challenging than perhaps what they were expecting.
Yeah, I agree. I I think the other thing from a fintech perspective, working with large global corporates and emerging, innovation technologies, is that fintech is clearly proven. We've got this consolidation you mentioned earlier of the market where there's been winners and losers, and the remaining fintechs are much more proven in their space. So the ecosystem as a whole is starting to trust those innovation partners a lot more than when we kind of popped onto the market and said, hi, we're here to sort of share your space, and share your data and share your customer experience and everything else. So there has been a journey to prove that the fintechs that have come onto the market, and quite often I think where things have broken down, I don't want to comment on that particular partnership because I don't have the expertise in it, but I think where things have broken down, it has been through misalignment and possibly lack of trust, and a little bit where some of the large corporates will be understandably very sensitive around providing the fintechs the kind of visibility you need to make that successful. As I mentioned, the key to any partnership and what we're trying to achieve is the end consumer. We're all in payments, and they have to be safe and they have to be resilient. And the corporates didn't have the trust in the fintechs to know categorically, I'm putting my brand next to a fintech here. This is safe, this is secure, this is not going to risk my brand. So I think there's an element there where as time has gone on, trust has built up, fintechs have become an integral part of the ecosystem of payments, and everybody can see that journey starting to progress and take comfort in it.
Yeah, and I think Dan and I were discussing this as well. Both organizations, I'm sure banks, all sorts of infrastructure organizations, you get a lot of pitches coming in. You get a lot of things. You need to look at a lot of things, and there's also some commonality between where it doesn't work. We've touched on some of it earlier, right? But this idea that if you're coming in pitching as a fintech, even you're coming in pitching, and all you want is the rails, or all you want is the scale, or all you want is the network, right? Then it does lack that common objective. It lacks that common value proposition for both institutions, and that's when it becomes really hard. And that's also where you see this, I think, people like banks, but I think pretty sure Visa would be the same, but really clutching on to the end user, whoever is your customer, be it whatever it is at what point in time, and putting arms around and saying, sorry, you're going nowhere near here because this is precious to me.
One of the failure modes we see sometimes with fintechs is they'll come to Visa and they say, hey, I've been trying to sell to banks, I'm having a hard time. Visa, you deal with over 10,000 banks around the world. Why don't you take my product and sell it to your clients? That'll be a great partnership. And we say, well, that's not exactly how we think of partnerships.
That's not how it works.
And that's something that I get people come to me quite regularly to understand how we have been so successful in this space, how Form3 have built these partnerships up. And I give them the same advice each time. You have to be bringing something to the table. You can't go to Visa and say, hey, Visa, we want to leverage your distribution model, but we are not going to give you anything in return. So it is about reciprocal value. And if you can't establish that reciprocal value, then you probably haven't got a successful partnership.
So we have a couple of minutes left for questions from the audience. If anyone has a question, we can provide you with a microphone. The gentleman over there.
Hi, thank you all. Just a quick question about the differentiation in culture between, I guess, traditional banks and fintechs. Traditional banks, I know I'm generalizing, are a bit more conservative and deliberate in their actions and things that they roll out. And the fintechs are a lot more dynamic, can pivot a lot quicker. So how do we make sure that we merge together in an appropriate way in which we service both of our customers in the right manner for our respective companies?
You actually probably need some written rules of the road, actually. It's pretty simple. So I think you need to both agree on those rules of the road, and you need to be very specific. You need to be super open and honest in those conversations. Being able to show the other party, okay, this is how my organization functions. I am going to come closer to you as much as I can, but this is the reality. And you understand, go kind of back to that deep understanding from both sides, right? So, I mean, being completely open and transparent, it helps that I'm close to fintech, and it helps that Andy is an ex-banker. Totally helps, right? Because would you agree? There is
absolutely. I think, as you rightly say, one starts from one end, one starts from the other end. And if you have that transparency and that understanding of, these are your challenges, Barclays, you've got a bunch of governance that you absolutely have to do. And Jenni will say to me, these are your challenges, Andy. You can get a customer live within 14 days and it takes us 4 months. But you start to bring that set of processes, and through that alignment and that visibility and building that trust, eventually the 2 points meet in the middle. And that's how then, along with having your coverage teams really well aligned, you've then got that understanding to go to market. You are not giving mixed messages out to your customer base, and you're putting your best foot forward together.
Yeah, I think that joint understanding helps. I think meeting in the middle helps a little bit. I think one of the other things sometimes we see with fintechs, in particular newer fintechs, is they don't fully understand the scale at which banks work. So if something doesn't quite work right, they stop, they fix it, and they go on. If you roll it out to a bank at scale and something doesn't work right, you have thousands or tens of thousands, or if it's on the consumer side, maybe millions of customers who are impacted, who are flooding your contact centers, and it's a significantly bigger challenge. So I think just a little bit of the education on, well, here's why some of these approaches are in place, so that you don't end up with some of the challenges after the fact.
Super. Thank you very much for your attention and your question, and I hope you have enjoyed the insights coming from this panel. Thank you.
Thanks.
Thank you.
Thank you.
Thank you.
Thanks.